I want to bring in, though, somebody who says this is no time to buy the chip stocks. It's Bay Crest Jonathan Krinsky. He joins us over the phone today because he does have thoughts on what this means to the overall S&P 500 as well. How worried should we be, Mr. Krinsky?
Well, let's start with the semis. I agree with a lot of what you guys have already said, and I think there is some bifurcation going on. We actually like AMD as an outright stock, but I think if we're talking about the semis as a group, I think there's almost a bit of a false sense of kind of how well they've done. They're up about 15% on the year, but all of that gain happened in the first few weeks of the year. They're actually flat since late January. So if you look at the relative performance of semis to the overall market, it's been weakening for 8 or 9 months now, and I think that's really the crux of it. If we look at the relative performance of the semis versus the S&P, that relative performance was above a rising 200-day for about 2 years, from the middle of 2019 until the middle of this year. But that 200-day, again, I'm talking about the 200-day of the ratio, of the relative strength, that's starting to roll over a bit. And that we haven't seen that since the fall of 2018. So there's a couple of things we don't like about that. Semis, if we're talking about the absolute weighting and how it impacts the S&P 500, it's about 5.5% of the S&P, which may not sound like a lot, but that's actually would make it the 8th biggest sector if it was its own sector. So it's not insignificant. I think to some of your guest points, it's more of a sentiment gauge. I think a lot of people look to the semis and look to their performance and relative performance as kind of a gauge for the health and sentiment of the market. So I think in so much as if we were to spend some time under the 200-day on the SMH, which we haven't really seen in quite some time, I think that would be, a bit of a warning, certainly for the group, but maybe possibly for the market.